Welcome to our long-form video from Holiday Let Investor. In this session, we will explore important considerations before setting a maximum offer on a UK holiday let investment so you can make informed decisions. Understanding buyer identification in detail before making any offer, the initial step is identifying the buyer named on the contract. While this might seem straightforward, it's crucial as it can significantly influence the land tax obligations you'll face upon completion. Different regions in the UK have varying stamp duty regulations. For example, England and Northern Ireland, the stamp duty land tax, SDLT rules apply here. Wales, this region follows the land transaction tax LTT. Scotland, here the land and buildings transaction tax LBTT is in place, which may introduce the additional dwelling supplement ADS in certain scenarios. Stamp duty rates by region. Let's look at an example of a property priced at £300,000. England and Northern Ireland. The standard SDLT would amount to £5,000 for residential purchases, but may rise to £20,000 under higher rates. Wales. The LTT for residential purchases stands at £4,500, and this can escalate to £19,950 under the higher residential rates. Scotland. For properties at £300,000, the LBTT is £4,600, yet this could increase to £28,600 if the 8% ADS is applicable. These examples underscore the necessity of considering tax obligations in your offer model. Chapter 3. The role of ownership structure. It is a common belief that purchasing through a company can lead to tax advantages. However, this may not be the case. In England and Northern Ireland, companies often encounter higher SDLT rates for qualifying residential purchases. Similarly, Wales imposes elevated residential LTT rates for corporate buyers. In Scotland, non-individual purchases are mandatory for an ADS check. Chapter 4. Joint buyers and tax implications. Joint buyers must also navigate potential complications. In regions like England and Northern Ireland, if one buyer falls under higher rate rules, it can influence the entire transaction. Ownership by a spouse or civil partner can have significant implications, even if only one individual is named on the deed. Exploring trusts and other arrangements for your investment. Trusts and nominee arrangements warrant special attention. The tax considerations will depend on the type of trust you're utilising and the beneficial interests involved. If you're dealing with a trust, don't depend solely on a generic calculator. Tax implications can shift based on trust type. Reviewing important classification considerations for your property. There's a notable misconception about classification. Just because a property is marketed as a holiday cottage or serviced accommodation doesn't automatically classify it as non-residential or mixed use. A short-let property may still be categorised as residential if it is suitable for use as a dwelling. Other factors like booking history or whether the property is subject to business rates do not inherently mean it is justified for mixed-use tax treatment. Conducting essential due diligence before your offer. Before you finalise your offer, ensure you gather the essential documentation: title deeds, property plan, lease agreements, planning conditions and occupation restrictions. Planning conditions and occupation restrictions. Additionally, create a clear list of all items included in the sale price, which should cover any extra land, furniture, fixtures, goodwill, existing bookings, deferred payment options, and any financing arrangements with the seller. Performing detailed tax scenario modelling. It's prudent to model 3 potential scenarios. 1. Expected tax treatment. 2. Higher cost scenario. And 3. Pause and check scenario if uncertainties arise regarding ownership or classification. Utilise comprehensive tools to model these scenarios accurately. Understanding the timing and payment requirements. Timing plays a crucial role as SDLT is due typically within 14 days of completion. In contrast, LTT for Wales and LBTT for Scotland lead to payment being required within 30 days post-completion. Therefore, It's essential to incorporate these cash requirements into your initial offer. Maintaining a clear view of performance post-purchase is equally important. Establishing a clear buyer structure. In summary, the decision-making process should not be seen as merely choosing between a personal purchase or a company acquisition. Instead, it's vital to clearly define your role as a buyer early on, validate all the relevant facts, and ensure that tax cash is accounted for within your overall offer limit. Consolidate all information related to the property's jurisdiction and classification prior to entering negotiations. Utilize tools like the provided deal checker to consolidate information related to the property's jurisdiction, buyer specifics, existing property details, and classification queries prior to entering negotiations. Having the right tools at each stage of your investment journey is key to long-term success. Remember, this video serves as general information only. Consulting a qualified conveyancer, and if necessary, a tax advisor, is highly recommended to clarify specifics regarding your transaction. There is no guarantee of profit, financial outcomes, or returns. If you need more holiday let calculators, guides, and deal checking tools, visit holidayletinvestor.co.uk.